What's going on, everybody? Jeff here. Welcome back to the channel. All right, just a quick recap on today, and I want to really highlight key levels. So the past few months, we have been playing SPY and QQQ pretty religiously because the indices are finally offering us the range. Now, the reason why I like playing these two tickers is because the options chain is very liquid, meaning there's a lot of volume, and the spreads are very, very tight. Now, normally when we are in a directional or a trend market, I will go after individual tickers such as Facebook, Nvidia, or Tesla because they offer more range than the actual indices, meaning they will move more points than the indices themselves. However, when we get to a very volatile market like we've been in, there's nothing better to play options than the SPY and QQQ. So in this video, I really want to highlight knowing key levels, okay? Because today things played out absolutely picture perfectly. I'm gonna break everything down for you. And especially if you are inside the group, you know the levels that I'm talking about. And I hope this gives you a better visual. So let's get right into it. First off, I played QQQ pretty religiously, exclusively actually today, up until the end. I did have one last SPY put going into close. It was a very, very short, it was about a 12% gain. And then I got out of it. I thought we were going to get a little overextended getting down to that 420 level. However, I have these levels that have been on, some of them have been on the chart since as of yesterday, some of them have been early this morning, and a couple of them, and as much as this 350, 343, just under 342, okay, and this level here was created on the 334, were dated much further back. And I will, get rid of some of these levels as they become a little bit more invalidated by other charts. I look at the hourly, the 15-minute, and the 4-hourly, but I really want to highlight this today because as you can see, how QQQ moved was absolutely perfectly. A couple things I do want to highlight. The previous day's low of day and the previous day's high of day can be very, very crucial in how a stock will move, especially when they're range bound, meaning it's getting down to a low, it's bouncing off that low, it's going back up to the high, and it's kind of just fluctuating, and we're not really getting that solid directional move. Okay, today, as you can see, it was range bound right from about that pre-market high of that 343. It had a little bit of resistance around that 342 level. We came back, this morning it opened, it really tried to get above it and it couldn't. And I had said to everybody, if we got below that 339.45, which you can see here, acted as support in after hours, okay, yesterday, pretty, solidly, as you can see here. Once we break through that, we have a little bit of resistance around that 338, or I'm sorry, a little bit of support around that 338, which is going to act as a resistance for your put position. And once we break that, it's going to be smooth sailing until we get down to yesterday's low. And I called this out saying to everybody around that 11:15, saying, guys, I'm closing my put positions. I closed them a little bit early. I did not bottom tick this by no means. I closed them a little bit early around 11 o'clock, just saying we're approaching that. We're approaching that level. And it bounced perfectly. As you can see, that 5-minute tick right down to that 334.45, went all the way back up to where we again had that support from after hours previously, okay, and acted as support from the open as of yesterday, and we immediately rejected off of it, and it just came right back down going forward. So I know people talk about the key levels, and when you think about how to chart these out, a couple things that I tend to do. The first thing I will do is I will look at a daily chart to give me some range and exactly where we're standing, what are things looking at, and I will slowly narrow it down. Now, I don't try to look at too many charts as it gets to be a little bit confusing. I don't do too much charting on the 4-hour. I try to look at the 4-hour as a bigger picture, but the 1-hour and the 15-minute are where I really like to narrow down my charts. And as you can see here, some of these lines that I have that act as critical levels, all right, especially this 334.60 around, or 334.43 that I have down here, was that massive tick that we had all the way back in late January. And you can see we had a bounce off of it just a few days ago on the 22nd. And I was looking for that level to hold. And a fail of that level to hold will give us more room to the downside. Once I go through the 4-hour or the 1-hour, I like to go to the 15-minute and then to the 5-minute. Now at the open, I will trade off of the 1-minute. And that's because I like the volatility that it provides me. I will also kind of, go and play, small cap stocks and try to get runners out of that as well. But if you're just starting out, if you're newer to options, Start with the 5 minute chart at the open. You don't have to get in right away. All right. The market is open, for what, 6.5 hours. There's plenty of time to get it in position. And as you can see, if you followed any of the notes that I had, the first position that anybody would have made would have been about 9:55, 25 minutes after the open. And you could have played that and been, extremely profitable throughout the day. So I hope this video just highlights a little bit about key levels and the importance of them. I will continue to make another video on how I specifically chart out key levels and how I weight them going forward, depending on how many, act as support and resistance on previous. So guys, that's it for this video. I'll see you in the next one.